Good morning, everyone. As Vivian said, so I'm a managing director at ENGIE Impact. ENGIE Impact is the independent technology agnostic consulting firm, decarbonization consulting firm of French utility ENGIE. And as you said, Vivian here with me about to drive this section. Ewout, do you want to say a few words before we kick us off?
Yeah, sure. Thank you, Antoine. And a warm welcome to our panelists and also everyone online joining this webinar. So I'm heading the climate finance practice at responsAbility, and climate finance is one of the three investment themes that we manage as responsAbility as an asset manager next to financial inclusion and sustainable food. And today we very much look forward to put the lens on LATAM and share with you some of the highlights that we are seeing in this market.
Thank you, Ewout. So maybe to kick us off, let's dig into the key drivers and also after that the key challenges we are seeing in the region. So I'll start with the key drivers. The first one that comes to mind is definitely the climate goals. And when I say climate goals, I mean the pressure, the international pressures and the global agreements that have pushed countries to make some bold commitments. I think despite the fact that many organizations and also some independent scientist projects like the Climate Action Tracker think those commitments needs to be reviewed or still a bit insufficient. I think one good news is the coverage we are seeing. So 28 countries, almost 30 countries out of the 33 countries in LATAM have some NDCs related to their decarbonization path forward. So that's for sure a good element. I think an interesting case is Chile and everything related to coal in Chile. So you might know that Chile in 2021 joined the PPCA, so the Powering Past Coal Alliance. And this went well. They defined coal to go, let's say, coal-free. So by 2040 approximately. And definitely this has triggered a lot of private and public discussions and investments in new clean tech, new clean technology. So I think this is very interesting to notice. If we move to the next point, the growing trade. So we are seeing that nearshoring is something that is already happening. In the past few years, we've registered a 10%, approximately 10% increase in the nearshoring effect. One of the countries that actually most benefited, I think, from this effect is Mexico. So a lot of those 400 international companies that we are seeing expressing interest in moving to Latin America, some of their facilities, a big piece and a big chunk goes to Mexico. And this has obviously country level positive impacts, but also local level positive impacts with increased needs for energy, green energy, but also low carbon solutions. So if I look at our work at ENGIE Impact, we've seen actually as part of this nearshoring effect, several companies in Mexico that have built new facilities or are building new facilities that by design will be net zero from day one. So obviously this will create the traction and the requirement in terms of climate financing. If we go to a third piece that we believe is important is actually everything related to the unfair advantages that we're seeing in Latin America. So when it comes to energy and the resources that the region has, obviously we're thinking about solar, for example, Chile, Peru, the Caribbean, wind also for Patagonia, Argentina, Chile, and hydro, Brazil, for example. So if we look at those unfair advantages and if we understand how much coupled they are with the decreasing cost of those technologies that is happening and is a quite interesting curve, basically I think the incentives are in place for renewable to take on even further.
Yeah, and Antoine, in addition to these factors that you mentioned, what role do you think that renewables can play in making the region more resilient to climate change events like droughts, flooding, etc.?
Yeah, that's a very good question because we talk a lot about mitigation, adaptation, and the resiliency is critical. So we are seeing that the exposure that the region has to climate change is disproportionately large compared to the contribution of the regions to the global emissions. And you're right in mentioning droughts and other climate risks like flood. So we've seen the recent very sad and tragic events in Brazil, the floods, or the recent wildfires in Chile, one of the biggest one in Valparaiso region recently. So all these for sure will require a lot of investments, that will require to be financed. So definitely adaptation will be a big driver, I think, of this climate finance take on. And one maybe key point to highlight about in this regard, the UN Environment Program actually published a very interesting study saying that around $50 billion will be needed actually annually in LATAM to face the cost of the adaptation required. So this is massive. Maybe moving to the next topic around the challenges. So I think one of the first that comes to mind is political uncertainty, just because it's, I think, very inherent to the Latin America context. There have been some recent election. There are some more election to happen in Venezuela, in Uruguay. But if I look just a few weeks ago, the recent election of the first female president in Mexico that happens to be a climate scientist, there are a lot of questions around, whether her mandate will be more on the continuity side of things or on the disruption side of things. So a lot of question and therefore a lot of uncertainty. I think when I look at our work at ENGIE Impact, actually we've seen in the first semester a lot of projects being put on hold by private players. Actually, I think about a CPG company, a consumer good companies that was willing to develop a biomethane valley in Mexico that actually decided to wait for the mid-year election to see how things will move forward. So definitely this has some consequences. If we look at the regulation part, I think there is a global consensus that most of the technology that is required for the world to go net zero and for the region to really decarbonize already exists today, most of the technology. But the lack of regulation is really one of the key blocker for the development and the transition to happen. So definitely something important to keep in mind. I think when I look at some, other regions and looking at the US, naturally, the Inflation Reduction Act has had already a lot of great impact and a lot of great traction. So I think this is a good inspiration about for the region. Some public announcements have been made a few weeks ago by Kraft Heinz, for example, who decided to partner with ENGIE Impact, and we helped them secure around $170 million of public fund from the DOE. So I think this kind of level of financing needs and the decarbonization momentum is what happens right now in the US and hopefully in LATAM as well. So more specifically, we're seeing some lack and delays of regulation related to renewable distributed generation in Colombia, in Mexico, in other places. And just to take another example, I think the EV deployment in Brazil is also something that will require a bit more push from the regulatory perspective. And maybe thirdly, and I think I will turn to you about the financial context. So both the currency depreciation and what you're seeing as the movements of the interest rates recently.
Yeah, no, definitely, and I think that's a very relevant aspect. So I think we manage as an asset manager US dollar funds on behalf of pension funds, insurance companies, etc., and they expect us to invest in emerging markets in renewables and at the same time deliver a US dollar return. And this is not always known and visible to the sponsor or the parties that we work with in those regions who need often long-term local currency funding, because they also get paid in local currency. And we can provide that, but it means that we need to hedge our facilities. And yeah, I mean, knowing the LCI and the local currency developments in emerging markets and also some of the LATAM markets, with sometimes double-digit depreciation patterns over the past years, this means higher rates. And of course, and this can make investments and seeking funding for those investments more challenging. And the way that we try to mitigate and find a common ground there is providing more flexible terms when it comes to grace periods, tenors, off-balance sheet structures, holdco finance, etc. So basically that what is not so randomly available or easily available from the local markets is something that we as RA responsAbility then can provide. Same time, we have to be realistic, and that's kind of a balancing act, that as debt providers, we keep in check our returns with what the equity investors seek. So that's the other side of the coin. But I'm also curious to hear indeed later on from the panel what challenges they see in terms of investing in the energy transition space in Latin America.
Yeah, very interesting. So if we move to the next slide, actually, all in all, I think looking at the drivers and the challenges, all in all, we do believe there is a massive opportunity in LATAM. So obviously, in absolute terms, LATAM is a sizable region in terms of GDP. When we look at the recent story, probably the region did not manage to capture all its growth potential in the past years. But that said, some key elements that we need to keep in mind is actually not only the unfair advantages that, as we said, LATAM has in terms of wind, solar resources, but also in terms of mineral resources. So Chile, Brazil, Peru, Mexico, so many of the countries that we are looking at will play a critical role in the energy transition, globally speaking, providing the minerals that are required. So Chile has 2/3 of the lithium resources known today, more than 40% of the copper resources that would be a critical input for the energy transition. So all that, I think, explains a bit what you're seeing on the right side, the key numbers being today $40+ billion of climate finance market based on everything I just mentioned and all those key trends. And also looking a bit further than today, what we expect is a significant growth year after year until 2030, probably up to 4 times what we're seeing today. So again, all in all, a lot of opportunities we are seeing. If we go to the next one, I think, and then I will turn to you, Ewout, but I think if we look at or we put some more micro lenses to what we just said, and we look at the country level, we actually found some very interesting connection between countries and segments, a lot of very, very interesting pairs. So we already talked a lot about Mexico, about Brazil, I guess. So maybe taking other example like Costa Rica, it's very interesting to note that Costa Rica has the highest number of EVs per capita in the region, and there is a lot going on in Costa Rica in this important decarbonization lever. If we look now at Dominican Republic, the country has done a lot of efforts in terms of renewable. We've seen an 80+% growth of renewable generation in the past 5 years, and the country is actually seeking to make renewables up to 25% of the energy mix. Today, it's a bit less than 18%. So here again, a massive shift. But again, there are many examples, Chile, battery storage, and others. I think, Ewout, you're going to share a bit more about this in a second.
Sure. I think if we move on to the next slide, also in the interest of time, so that our panel also can share their views. I think the main opportunities that we see today in the LATAM climate finance space is in the C&I space and the small to mid-size utility project. And especially within these segments, we see very high potential in Brazil and Mexico. I don't think that would surprise anyone. Brazil, very much driven by a growing demand from energy stimulated by public policies, but also by nearshoring, as was explained by Antoine. Today, for instance, the C&I market in Brazil already accounts for more than 60% of the total installed PV capacity in the country, and that is already a massive 40 gigawatts. And expectations are that this C&I PV market in Brazil will at least double, if not triple, towards 2030. Similar cases, of course, Mexico. We see a growing demand there also in the C&I space from the nearshoring trend and manufacturers that want to manage their cost of energy and also have a growing interest to procure more renewable energy to meet their sustainability objectives. And we expect that this will also have a very strong pull factor to developers and sponsors from other markets that we can then, as financiers, join forces with. Now, beyond those two mega markets, I would say, which are almost regions in itself, we also see strong opportunities in Chile and the Caribbean, also on the C&I side and the small and mid-sized utility projects. And then continuing, let's say, beyond the utility, or sorry, the renewable energy generation, and that's, I think, the next slide. We also want to highlight that aside from this, we see a growing momentum in what we call newly emerging segments. For instance, energy efficiency in the form of green buildings, energy as a service, battery storage, and especially what Antoine already mentioned on the EV side. These, it has to be said, are still relatively small markets, but what we see from experience that we have in other industrializing emerging market regions, these markets can really take off and show an exponential growth under the right set of conditions. And one example in that regard to highlight here is the case of battery energy storage systems, also called BESS. And we see already attraction for small to mid-sized systems in the regions, with Chile taking the lead, as is shown in this slide, with 300 megawatt storage installed. And as I think some of you might know, there's quite a sizable tender upcoming in 2026, a multi-billion-dollar tender that's to be expected in Chile. And I think that shows that if you, as a country, have the right set of regulations in place, that can really multiply and enhance the developments in such a market. And it will definitely make up for an interesting opportunity for us to follow as a financier.
Maybe about
Right.
just very quickly on this slide, I think you mentioned a very great example, the best one in Chile. Very quickly on energy efficiency, you said energy efficiency is obviously not new, but we are seeing at ENGIE Impact a lot of traction and companies looking into energy efficiency, mainly because they are probably still very immature in their decarbonization journey. So energy efficiency and the right sizing of the energy needs is definitely one of the first decarbonization levers company pulls. And we are also seeing that those companies look into that actually to have the co-benefit of savings, not only energy reduction consumption, but also the savings it implies, and potentially using those savings as also a financing element, not to fuel a bit the journey they're pushing.
Yeah, no, thanks. And I think this is also a good moment, right, to summarize and wrap up before handing over to the panel. I think 3 key takeaways from this conversation from my end. As RA responsAbility, we see a growing space for debt providers like ourselves, also based on discussions that we are having with developers and sponsors in the various segments, and they all confirmed that there is a need for that. And I think we've also given a couple of examples. In the case of Brazil, for instance, a market in the C&I space that expected to double, or some say even triple. I think the second point is that the climate finance space in itself has still room for improvement. From conversations that we are having, repeatedly mentioned that we need to shorten our approval times, that it is some markets difficult to get non-recourse financing, also in quite developed markets like Brazil, for instance, and especially in the new segments, the EV, EE, there's a lot of abbreviations, by the way. There's a difficulty for players in that segment to raise private debt. Now, and the last point, I think, a takeaway is it's about partnerships with developers and sponsors. As we manage GCPF, the Global Climate Partnership Fund, I think that's really important for us, that we find the partners that we want to work with in terms of developers, sponsors with committed and strong shareholders, also preferably track record, or at least indeed a lot of experience in the segments or in other regions, companies that are also growing and looking for long-term funding partners to help them to achieve and execute on their strategies. So by summarizing that, I think we can now move on to the panel and discuss these topics with a great set of panelists. Over to you, Vivian.
Great. Thank you, Ewout and Antoine, for setting the scene. And to some extent, as the Financial Times put it in a recent article, Latin America's It's the region's unique advantages offer an extraordinary opportunity if its governments can step up as well. So, right, it's a bit of a combination. It's a private sector coming in, but also the governments and the policy, the regulatory framework also, it has to be in place. And now in the interest of time, indeed, we move on to the panel session where we have invited 3 partners of responsAbility. We have Nicolás Yancola from Cifi, who's a large sustainable infrastructure investor in the region. We also have Gustavo Chaparro from Green Yellow, also a global developer of energy transition projects, and Christian Enchauste from Finergreen, who's a financial advisor also with a global footprint. So I will let them briefly introduce themselves once I ask the first question. And moving on to the first round of questions, we want to hear from the speakers, what are the attractive markets and what are some of the challenges that they have seen, each from their own perspectives. So first, Nicolás, could you share a little bit of Cifi's journey in the region and which markets in Latin America and which sectors would you say are more attractive and why?
Hi, everyone. Thank you, Vivian. It's a big pleasure to be part of this webinar. Thank you again for the invitation. My name is Nicolás Yancola, and I lead the business origination team at Cifi, which involves overseeing the region and identifying opportunities where Cifi can provide financing for projects to be carried out. Just a little bit about Cifi. Cifi is a private financial institution that was created by the IDB and born in Washington, D.C. back in 2002 that provides financing to energy and infrastructure projects throughout Latin America and the Caribbean. At present, most of Cifi's investments are in renewable energy and sustainable infrastructure projects. And until now, we have financed more than 220 projects in almost all of the countries in the region and mobilized more than $20 billion with these investments. In 2016, Cifi moved to Panama to be closer to its clients. And also, for the record, we have recently partnered with responsAbility to finance some projects together. So as I was saying, Cifi's journey began back in 2002 when it was created to become the first private financial institution to focus exclusively on financing these kind of projects. We have seen a clear evolution towards green, sustainable sectors focused on decarbonization since 2014, mostly. And today, the largest part of Cifi's projects portfolio, around 2/3 of it, it's made up of projects relating to renewable energy, energy efficiency, and biofuels. Cifi was present providing financing in all the first rounds of renewables in several Latin American countries, such as Chile, Argentina, Panama, the Dominican Republic, and so on. And since then, Cifi has been a pioneer in the development of products and structures to promote the energy transition, not only for big projects, but characterized by finding niches where project financing was not yet well developed. So, for instance, Cifi was the first lender to structure a large-scale financing for a distributed solar platform in Mexico. And since then, we have done several business in that sector. And also, we were the first financier of a PMGD portfolio in Chile. PMGD is a mechanism and regulation to promote distributed generation in Chile. But apart from that, we also see climate financing from the perspective of implementation of sustainability elements in other types of infrastructures, such as sustainable logistics or sustainable tourism, suggesting operational improvements and KPIs to measure these sustainable performance, let's say. In 2023, we saw a big opportunity in the market, and we structured and closed the first sustainable infrastructure debt fund of 300 million to include not only renewable energy projects, as I was saying, but also other types of infrastructures with a clear climate and sustainability requirements, such as, for example, no more than 25,000 of CO2 emissions per year, using renewable energy, resources, energy efficiency initiatives, rainwater use, and recycling. And we are looking at areas such as I was saying, more market-driven, such as sustainable tourism and sustainable logistic parks, considering the market demands for decarbonized value chains. Now, due to its track record, Cifi was created by the Green Climate Fund this year. That is the world's largest climate fund created in the United States framework for climate change, which is quite an achievement. But returning to energy, we do see that today the market and the ecosystem of energy transition lenders has evolved, and there are many players willing to finance the medium and big utility scale solar and wind projects. But we see distributed generation, for example, as a great opportunity that was already mentioned earlier. We see that consumers, residential, commercial, and industrial are increasingly being interested in reducing the energy cost and their carbon footprint together. And this has generated a growing demand for distributed generations in almost all of the countries of the region. But we see that the biggest opportunity in countries like Colombia, Brazil, and Mexico, which are very well advanced in the regulation. There is room for investors and lenders of different characteristics. We are also seeing a very, very interesting opportunity in energy storage. We envision that the next 5 years will be of great growth and penetration of the storage components. Just to clarify, so battery storage systems can store energy at times of low demand and low prices, and supply it at times of higher demand, helping to reduce peak energy demand and optimize the use of electrical grid, and also to improve the financial performance of the projects, right? So in Chile, for example, the storage component is being added to help solve the big issue with curtailments in the north of the country, low energy prices at some times of the day, and the issues that the lack of transmission infrastructure is generating. Because it is real that the acceleration of renewable energy projects was much faster than that of the deployment of transmission infrastructure, right? And not only for large-scale projects, but also in smaller distributed scale, we are also seeing interesting opportunities in storage. As we mentioned, we have financed several PMGDs, these distributed generation projects in Chile, and we are now evaluating to finance the incorporation of batteries to optimize their operation. And we are seeing different business models in storage, from leasing, but also more innovative ones like share savings, revenue sharing. And we are exploring and studying a lot and seeing more and more initiatives and developments. It is also interesting that in some countries, such as the Dominican Republic or Puerto Rico, it's being required for the renewable energy projects to have a relevant battery component for them to be able to obtain the concessions to sell energy to the public distribution companies. And just one more thing to mention, that with batteries, as it was with the first round of renewables and then distributed generation, clear regulation is what helps promote the development and financing of projects, these kind of projects in the region.
Great. Thank you very much, Nicolas, for those thoughts. Now, Christian, as Finergreen is a financial advisor, what type of drivers and challenges do you see to project development in Latin America? And how can players in the region overcome these challenges?
Thank you, Vivian. Good morning, everybody. So my name is Christian Inchauste, the managing partner for Latin America for Finergreen. I share this responsibility with my colleague in Brazil, Vladimir Olarte, who heads the Brazilian division of Finergreen. Our investment banking was set up 10 years ago with the goal of helping developers and international companies to foster energy transition projects all over the world. We are a global financial advisor. We are present in Latin America since the year 2018 with the offices of Mexico City and Sao Paulo. And we have been very successful on helping European companies to expand all over the world, and in each continent to help local developers to structure and finance their projects with multilaterals, export credit agencies, and partners such as responsAbility as well. So that being said, what are the challenges and the potential of the region? So let's start with the potential. As we saw in the previous and the initial presentation of Antoine and Yvot, The region has a lot of potential given the needs of CapEx, of capital expenditures in the sector. Only in energy, probably like between 40 to 50 billion per year. But you could add a larger CapEx number if you include transportation and probably the decarbonization of the mining sector will be key element of the energy transition in most of our Latin American countries, which are producing copper, lithium, nickel, and all the 37 minerals essential to the energy transition all over the world. So LATAM will be a very important region and strategic region for energy transition, energy climate financing. Regarding the challenges, we have mentioned previously some of the challenges, which are the regulatory ones. The regulation in most countries should be adapted to energy financing, to climate financing. It's already happening in Chile, which is the more advanced country probably in the region. We have seen very good examples in Uruguay, which is a small country, but has been very successful in implementing energy transition. And Colombia and Mexico are trying to keep up with this trend to foster the sector. And obviously Brazil, which is the largest country in the region, will have to make some efforts to incorporate battery storage, hydrogen, and all the new developments. What's the impact on the financing side? Very important. We will need flexible financing partners such as responsAbility, given that the current trend of interest rates at the US Treasury level and SOFR is not very positive, let alone that some countries lack from local bank financing for this kind of investments. So we will be relying to more creative solutions as mezzanine debt, as BOTs, and all the packages that we could have with companies such as responsAbility.
Great. Thank you very much, Christian. And now over to you, Gustavo. So from a developer standpoint, especially with a global footprint, what variables did you evaluate when going into Colombia and Brazil? And what are some lessons that can be applied from your experience in Asia?
Yeah. Thank you, Vivian, and thank you everybody for the invitation, and hello to all the participants. So I am Gustavo Chaparro. I am Latin director from Green Yellow. Green Yellow is a French developer and investor of decentralized infrastructure in both energy efficiency and solar photovoltaics. We're present in more than 15 countries around the globe, including Brazil and Colombia, where we operate since more than 10 years ago. So to your question, so in our case, as investors, as developers of energy efficiency and decentralized solar, we analyze first, of course, the governments and society consensus on non-conventional renewable energy. What is the commitment of developing clean energy in the medium and long term? What are the political, economical trends, for example, currency volatility? Second, we evaluated the country's energy regulation framework, not only the current one, but also the pipeline. How easy is to develop, contractually speaking, as infrastructure as a service model? Are there not tax incentives? And how the financial markets work? Two things on that, for example, to understand how non-recourse project financing can be deployed, and how, for example, we can repatriate funds and deploy back again into the countries from headquarters and vice versa. And third, we in our decentralized business, the infrastructure and transmission grid connectivity issues is less relevant, but of course it's something that we take a look. So we assess also the potential market size of these countries, what is the competitive environment already before our entry, and the size of an industrial sector, which is our main markets. We help industries to decarbonize, and we question ourselves, do we have already international clients also present in this country where we analyze that help us with a head start? So, for example, to finalize, we have chosen not to focus on certain countries of this region due to an already high market competition or already smaller market size. On our experience in Asia, and yes, we are present and leaders in Vietnam and Thailand. I will rescue three things. The first is that even within the same region, we as developers need to recognize that there are different historical and cultural contexts, and we need to adapt in the best way. So it's important not to underestimate this. So this means finding, for example, and concretely, the right balance between the local and the international talent that we bring to a specific region. Second, on creating regional hubs like Latin America or like Southeast Asia, and to foster synergies. It is a challenge because the countries are very different within even a same region, Thailand and Vietnam, Brazil and Colombia. So our experience in Asia, where we started since the beginning as a hub, is helping us a lot in how we engage in synergies between Brazil and Colombia, where we started as separate countries and business unit. And finally, for probably the most important learning on this is building strong local partnerships from the beginning. So this means installers, construction companies, business introducing, banks, financiers is a crucial lesson that we apply in LATAM and in all other regions. Vivian, back to you.
Thank you, Gustavo. And if we stay on with you, but now moving on indeed to the financing context, can you share with us a little bit of what elements do you look for from your financiers, especially from a private sector perspective, but also even from a public sector one?
True. The reality is that both of them are super complementary, right? So, for example, for the private financiers, we look at deep understanding of our sector and especially the infrastructure as a service model. This is very important with energy efficiency. We talk a lot about solar, but energy efficiency and reducing energies is the first leg of this decarbonization for our clients. Second, super important, more flexibility in the negotiations, in the terms and conditions, in the analysis of approvals. And because these contracts are long-term contracts, we sometimes need to request waivers, renegotiate the contract, etc. So that flexibility is super important for our private financiers. Second, speed. This is energy transition. We are competing with a lot, and faster structuring approval times is key. And this is what we're looking for from the private side, flexible package of guarantees, and finally, the creation of a relationship to develop synergies on repeat deals, Vivian. This is super important, especially in the decentralized world, where there's similar but smaller assets, and the creation of these synergies and repeat deals with provide financiers is important for us. But of course, the public financiers in several countries are super important for us. So first, I will say that for them, we look for longer tenors, less relevant in energy efficiency, where our contracts are from 7 to 10 years. But this is key in solar, where the assets can have a useful lives of 20, 30 years, even beyond the first PPA. Second, I cannot stress the importance of the public financer being anti-cyclical and the presence and this anti-cyclical presence in the market, where most actors, we develop assets for the long term, and we do not necessarily pace our investments according to cycles. This is super important, the anti-cyclical presence. Of course, attractive funding costs, subsidized loans that are managed by these public financings are part of it. Of course, this means that timings could be longer, and there's necessity to some structuring and analyzing. But again, this complementarity is what is driving us in this financing market, Vivian.
Great, thank you, Gustavo. And now back to you, Nicolas. In terms of the typical financing structures, what does typically Cifi offers, and how do you think these match with the needs of the developers actually in the region?
No, perfect, Vivian. And we always try to meet with the expectations of that just Gustavo mentioned. Mostly project finance, I would say, either for single assets or for portfolio of assets. Project finance was already mentioned previously, but it's a non-recourse type of financing based on the particular asset or project and its particular cash flows and conditions, right? So Cifi is an institution that was born and created to do project finance, and today I would say that almost 85 to 90% of what we do is project finance. In this way, we can bring the best practices of how to finance energy and infrastructure projects, the adequate allocation of risk and mitigants, and optimization of capital structures for each project. but we also have the ability to be flexible and find the best structure for each project, right? Some projects need tailor-made solutions. What we can do is we can offer long terms, as Gustavo requested. Since due to our DNA, we believe in the long-term resilience of infrastructure, and we have an appetite to finance longer tenors, let's say up to 18 years, for example. It's something typical for us, and it's much appreciated by our clients. This allows projects to have the capacity to have a debt according to the cash flows over time, and also to allow an interesting return to the sponsors during the life of the project. And also, depending on the needs and the context of the project, we can do and offer shareholder loans, holdco loans, or bridge loans. It is something we have done in several opportunities, and it depends mostly on the necessity and requirements of the client.
Okay.
Just a few more things. Something interesting we can do is finance portfolios with assets that are located in different countries, as this saves the sponsor time from having to go and look for different banks for different projects in different countries. For example, just as an example, but we can finance a portfolio of distributed solar projects that are located in Guatemala, El Salvador, Honduras, and Panama, and do it all under the same structure. We can complement also our financings with subordinated products, our mezzanine, if the sponsor needs a little bit more leverage to complete its financial plan also.
Great. Yeah. So quite a lot of flexibility there. And now, Christian, we probably have some smaller project developers joining us. So as a financial advisor, what are the top 2 or 3 most common advice that you give to project developers or financiers within this small mid-size funding? And what are maybe some common mistakes that the players should look out for?
No, okay, very, very important question, Vivian. Yes, and among our clients, we have a bunch of middle market developers, local developers, European developers, and the common mistakes are essentially 2 or 3. First of all, probably the first one is lack of experience in the sector, and some developers just jump in the pool without knowing the context or the regulation or the market. And probably the advice is to partner with somebody already working, already operating in Latin America. Another common mistake is the lack of regulatory knowledge. The regulation varies country to country. It's different in Brazil, in Mexico, in Bolivia, in Chile. So that could be a challenge for a new entrant. And obviously, it becomes more complex when they try to enter to the new technologies like battery storage, distributed generation, supply, etc. Last one is lack of patience. Probably some investors want high returns very quickly, and obviously this sector is, as our colleagues of Cifi and Gustavo mentioned, is long term. It's very long term. You have to be patient. You have to structure your project because it's a different. You have different tenors and different challenges than other sectors. So the global takeout of these potential hurdles is try to have advisors, obviously in the financial side, like the Finergreen or other companies, but also very good technical advisors and legal advisors, and that's the way to begin to structure the feasibility, the engineering phase of the projects in Latin America.
Thank you. Yeah, very good points there. And indeed, there's not one size fits all approach, right? When it comes to financing, especially these different types of business models. I mean, distributed generation is a bit more developed, but also for the emerging sectors, you have to be more flexible in terms of, to meet the different needs. And now, just mindful of time, we go to the final round, and basically this is the same question for all. So if in 1 minute, please, each panelist can say a few words on how can we accelerate the climate finance market from each of your perspectives, please. So if we start maybe with Gustavo.
Yeah. Oh, thank you, Vivian. Yes. Very quickly then. So first, clear and consistent policies on private investment from the central and regional governments. as you mentioned, especially for new segments, in order to kickstart them, fiscal incentives and subsidies will be important. We see what Europe and the US is saying, and countries in South America saying and doing, and countries in South America and Latin America and the Caribbean are doing the same. Faster permitting and approval process, it's very documented. It's an important part. Two, regarding the finance side, first, we need more increased availability of financing options that are doing the match between better and lower cost and interest rates with projects that produce the most important decarbonization effort. So more decarbonization, less cost and interest rates is something that we need in our region. And finally, as the International Energy Agency mentioned a couple of weeks ago in its very recent World Energy Investment Report, in the section for Latin America, we need developments and mitigants for macroeconomic risk, including FX volatility and low availability of long-term hedges. And for example, this is precisely what Brazil wants to tackle with its Eco Invest Brazil trade lands that recently launched a couple of weeks ago, and that they will communicate during the G20 Vivian.
Thank you. Nicolas, please, same question for you.
No, perfect. I would add not only the robust legal frameworks and protection to investors, but also regulation development, right? With battery storage, for example, we see some countries moving faster than others, and there is where you see the projects being developed, more projects being developed. Or for the case of distributed generation, what happened with net metering, which is regulated in some countries but not in others. So net metering is what allows consumers to sell surplus of energy generated with their own systems to the electrical grid. And in the countries with that is not regulated, so there are less projects being developed. And I would say one more thing that is infrastructure related, but the transmission infrastructure, okay? And that's more for middle or larger projects. But there's a lack of transmission infrastructure that is kind of a risk for climate finance in countries like Mexico, Chile, Argentina, or even the Dominican Republic, right? Because projects need to be able to evacuate its energy and avoid curtailments.
Thank you. And Christian,
thank you, Vivian.
Same
totally
question,
in line.
Please.
Yeah, totally in line with Gustavo's and Nicolas' comments. So take a closer look to regulation, take a closer look to transmission, will become an issue in the future. Transmissions risk can be mitigated to battery storage and distributed generation. This helps to embed all the electric systems in Latin America. And I will add a last one, which is starting to look at mining in Latin America. There is no possibility to do energy transition with our current technologies without mining. Latin America is a very strong mining region, and our country produces most of the 37 strategic minerals for energy transition, starting from copper and lithium, nickel, tin, silver, wolfram, etc. And it's very important to take a look to the mining sector and start decarbonizing the mining sector in Latin America.
Great. Yeah, that's a great point. And that's just actually also one of the questions that we were thinking, in terms of what industries you think could drive this, again, climate related investments within the region. And mining, it's an interesting one, although, right, it has its ENS risks and then other risks attached to it. I wonder, how Cifi may look at it, or even Green Yellow and you, Christian, in terms of, the mining industry.
Very complex industry. It's a very different animal from oil and gas and clean energy. It's very closed. They are very processing mining are very slow from the moment you identify a resource, let's say copper in Chile. From the moment you operate the mining, it takes like 10 years. The needs are very huge in the world for any of these minerals. And I think there's an effort to be made both by the private sector, both by developers and governments, to integrate the mining sector in Latin America to climate financing and energy transition.
Yes, on our side, Green Yellow, as we are decentralized and our assets are closer to reclaim, yet could be the oil and gas, but again, there are other sectors that complement, that are closer to our activities. Hotels are one of them, and Latin America and the Caribbean is an important region for where there's decarbonization efforts and energy efficiency efforts, especially in HVAC. Logistics sector is very important for us. The industry of food and beverage, food processing in general, and finally logistics, where there's a lot of warehouses and logistic development that needs to be decarbonized or needs to profit from the spaces they are creating, Vivian.
Okay.
No, I was going to mention the same, but just back to mining, it was something that back in the past, Cifi used to do. We stopped it due to its ESG implication, let's say, resource consuming and invasive to its surroundings. But we know that nowadays it's crucial for in terms of the transition supply chain, right? So lithium, copper. So it's something that we are still like rethinking.
Great. Thank you for that. And maybe just one final question. I saw people are posting, we're wrapping up. We have a few minutes left, but in terms of, are there any segments that may be still too early stage now, but you think have a lot of potential? For example, green hydrogen, or what if you can just share maybe in 10 seconds.
Definitely, Vivian, green hydrogen with the first derivative, which is green ammonia. The issue with hydrogen is how to transport it, and it probably will make sense in the future with producing plants very close to consuming centers. Example, green hydrogen in Chile for the mining sector, the steel sector, or the cement sector. And then if the industry goes up and it develops, the green ammonia will be a component of this new trend in the future.
Great, thank you. Nicolás, Gustavo, anything to say there? Any sector that is still early stage, but you think has a lot of potential more longer term?
On green yellow side, as a centralized sprayer, yes, it is too early stage as the question was asked. On green hydrogen is something that we're seeing probably will be tackled by centralized large corporations. It is an industry that is 5 or 6 industry within it. So we'll see the development of it. In the meantime, we say that it's still, there's a lot of us to do on storage. And in order us to potentialize even more the decentralized solar energy production with storage, as Nicolás is saying, is something that is still going to take us a couple of years. So while we start looking at other industries. And of course, in the case of energy efficiency, there are many use cases and technologies that are there that exist, and it's more about the deployment.
No, perfect. Right. And I would say, and I would just add decarbonization of the air and water transportation, right? Biofuels, we are also starting to look at some interesting projects in that sector.
Great, thank you. And I see there's one question that was posed, and I'll summarize it. What are the most effective strategies for securing equity financing for specialized companies that have a track record in utility scale and distributed generation? This is considering the current market trends and investor preferences. Maybe this is a question for you, Christian, as a Finergreen financial advisor. Most effective strategies for securing equity.
More effective strategy for securing equity is, first of all, have a well presented and studied project. That's the first of all. We go back to the question of the mistakes. So you have to be 100% sure of what you are presenting to equity investor, which is a very peculiar universe, as you know, Vivian. And then have probably on your side somebody who can introduce the company to this universe, both in Latin America, in Europe, and in the United States. As the audience knows, there are a lot of big funds in the region investing at utility scale in climate transition. There is probably a phase 1 that is already finished of the expansion of the industry in large countries like Mexico, Brazil, Colombia, or Chile. And probably we will have to pay attention to the phase 2, the next phase, with energy storage, distributed generation, and the new technologies we mentioned today, to see how these funds and institutions will react to that.